Wages are up, but so is inflation. There are labor shortages, but job numbers are good. So what do all these numbers mean, and how do they affect the economic outlook for our area? That's coming up next on Newsmakers, presented by WNIN and the Evansville Courier and Press. So we're hopefully coming out of a pandemic that has drastically affected the economy. Last year, there were the signs of a recession, and many were worried about how long that would last. Most economic indicators seem to be good, but what do the experts say? The Evansville Regional Economic Partnership invited Tom Jalix, Vice President and Director of Asset Allocation of Fifth Third Bank, to give his thoughts on the economic outlook. Here's some of what he had to say.
I'm the Chief Market Strategist for the Investment Management Group at Fifth Third Bank. That's a fancy title. All it really means is I lead a group of investment professionals. Our job is ultimately to make investment recommendations on behalf of our wealth management clients. As part of that goal, that job, what we're really trying to do is, one of our core tenets is trying to figure out where we are in the economic cycle. If we can figure out the phase of the business cycle that we're in, we'll make fewer investment-related mistakes on behalf of our clients. And fewer mistakes means I get to keep my job, which is thrilling because I've got a mortgage and 3 kids and a wife and car payments and law school for my wife, a lot of things. So I want to stay employed. There's really 4 phases of the business cycle. It's kind of recession, early, mid, and late cycle expansions. And if you can kind of nail where you are in the business cycle from an investment perspective, you put the odds in your favor of making good recommendations. And so our deck here is titled The End of the Beginning. And that's important because it's not the beginning of the end, it's the end of the beginning. So to no one's surprise, we had a bad recession last year, and I don't necessarily want to rehash it unless you do, because it wasn't really great times for any of us. We're out of the recession. In certain areas of our economy, it doesn't necessarily feel like it. There's certain areas of our economy that are still healing. We've been calling these industries in shorthand the kind of the scene of the crime industries. It's all the stuff that we really like to do. It's bars and restaurants and travel and leisure and sporting events and movies and casinos and airlines and hotels. These areas are coming back. They're not all the way back. So the economy is out of the recession. We are growing again, but there's still fits and starts. And there are lots of reasons to suspect and expect that we're at the end of the beginning of this new cycle and not at the beginning of the end of this new cycle. The 4, and I make this joke all the time, I made it last night, so sorry guys, here it goes again. The 4 most dangerous words in investing is, it's different this time. It's never different this time. Past is prologue. We've got like 90 years of kind of modern financial market history to give us clues as to what's going to happen next. The last 40 years in our country, our U.S. economy, the good times, the positive economic cycles have lasted like 5 to 7 years on average. The one that just ended in 2020 was about 11 years in length. And so putting that in perspective, 15 months into a new expansion, we just don't see a recession coming anytime in the next several quarters, or really probably the next couple of years. There's lots of reasons to think that bad things might happen, but if past is prologue, we think there's many quarters and many years ahead of economic growth. And we want to take advantage of it, whether it's for our business owner clients, probably a good time to borrow and invest if you think there's a runway of several quarters and several years ahead. And if you're an investment client, your 401k, your IRA, your brokerage accounts, despite very robust financial markets in the last 15 months, these cycles tend to last pretty long, and we think it's the end of the beginning, not the beginning of the end. I think that the biggest issue that we're really facing that is going to lead to inflation staying a little bit higher than many people expect is the labor market. So if there are any business owners out here, I'm sure there are, please ask questions or give anecdotes about how difficult it is to find marginal workers to come work for you. And we think it's hard too. Every conversation that I've had over the last 6 months, I've been hearing from business owners saying that we just don't know where to find people. We can't find people. We can't find people. And we think there's a few things going on. There are 2.9 million people that are not looking for jobs that were in the labor market 18 months ago. They're sitting on the sidelines, and there's many reasons for it. One of them is COVID scared people away. They wanted to stay home. They didn't want to get sick. Another was one of the parents in a family with children was probably needing to watch their kids who were sitting home and being schooled from home. So one of the parents dropped out of the labor market. And typically it was a mom. Third one is that our government, and I just told you out of one side of my mouth that all the help from the government has been very stimulative. So our government had two big programs that helped us get out of the recession. One of them was additional COVID unemployment benefits. So on top of regular unemployment benefits, the government, up until September 3rd, was doling out another $300 per week on top of your regular unemployment benefits to get you through a nasty recession. And that was wonderful. It helped. It's one of the reasons why that money market chart is way off the charts. It's really, really high. The Federal Reserve did a study back in the spring that said about a third of the people that were on the additional unemployment benefits were making more money than they were when they had their jobs. So when you have that situation, it's a disincentive to go back and work, right? So you had additional unemployment benefits, a caregiver to watch the kids, people getting afraid of COVID. We think that kind of makes up for most of that 2.9 million, why the labor force participation rate is much, much lower. We haven't seen the numbers improve yet, but we expect that they will. We actually had a really great jobs number this morning. Again, for the nerds in the room like me, maybe it's just me, I was paying attention to it. Most of the jobs that came back were in leisure, and these were all of the people that were making more than they were when they were getting their additional unemployment benefits. So we're starting to see it. It's the first sign to suggest that people are coming back into the workforce. But this is a real problem that will, if these people do not come back to the labor force, we're going to see wages go higher, which in the short term is good, because you'll be able to buy more goods and services, and our economy is driven by people buying stuff. Longer term, it's going to bleed into additional inflation. The inflation slide, it'll keep that green line higher for longer.
Our next guest is Chuck Gascon, regional economist for the Federal Reserve Bank of St. Louis. Welcome, sir.
Thank you for having me.
First off, what is the Federal Reserve Bank?
So the Federal Reserve Bank is our nation's central bank. So we're responsible for supervising and regulating financial institutions across the country and conducting monetary policy. So setting interest rates for the U.S. economy.
Well, what was the economic outlook before the pandemic hit?
So before the pandemic, we were in a situation where the economy had been chugging along for about 10 years of pretty steady growth. It was slowing down a little bit as we were starting to get constrained on hiring. And then obviously the pandemic hit and we saw the unemployment rate hit record levels and kind of our whole world turned upside down.
Well, what are you seeing as the economic outlook for our area now?
Yeah, so the region recovered pretty quickly after the pandemic, as did much of the nation. There's still a pretty big gap in overall employment. Things slowed down a little bit in the summer months recently, but overall the labor supply issues are really restraining growth overall, but demand seems to be really, really strong across much of the region.
What are some of the factors that you look at to make your analysis?
Absolutely. So the kind of two big pictures that we're looking at is overall demand for goods and services. So factors like household incomes, are they accelerating or growing at a stable rate? Wage growth, those factors will tell us a lot about demand for goods and services. And manufacturing production also gives us a good sense of where things are at. And then on the supply side, what we're looking at is the unemployment rate as well as the labor force participation rate to understand how many workers are out there that firms can actually hire to produce. The demand numbers look really strong and kind of provide a lot of momentum, but those supply factors are a bit restrained right now.
What do you think are some of the unknown factors that might influence the economic outlook?
That's a great question. I mean, I think the pandemic is still here. And so every time it seems like we think we're in the clear, we're seeing another wave of cases. We saw that with the Delta variant just in the last couple of months. It does seem like the effects from the pandemic are starting to get disentangled from economic effects, but those pandemic effects are still real and they're continuing to hold down things like the supply chain globally. And that presents some downside risks to the outlook. Obviously, there's a lot of legislation going through Congress right now. Infrastructure bill just being passed presents some pretty good upside to longer term growth and investment for the national economy as well as for the region.
Interesting. What factors would you identify that might be unique to our region?
I think that the main challenge that we see in the broader Midwest and Evansville in particular has been relatively slow to stagnant population growth. This and an aging population, to combine those two factors really present challenges for hiring for firms in the region. And we're seeing a lot of reshuffling of the deck as workers may move from one job to the next within the region. But without that broader population growth and retaining of younger people in the region, that presents a very unique challenge for this region, as well as many other parts of kind of the Midwestern portion of the country.
Well, our population in the city of Evansville had been down in recent censuses before 2020, and I wonder if we had suffered another significant decrease, what effect might that have had?
Absolutely. I think the growth in the city is what we're finding is really key in many parts of our country to sustaining population growth. So we're seeing households in particular are looking for a lot of amenities that small cities can provide. And if we can get population growth and growth in these city centers, it provides a lot of spillovers for the broader region. So I think it presents a great opportunity that is new due to the pandemic for some of these medium and smaller size cities in the region.
When I write stories for the Courier and Press, I always conclude an interview by asking, is there anything important that is on your mind that we haven't covered?
I think that we're in a situation right now where I hear a lot of questions about inflation. And being in the central bank, I'd be remiss not to talk a little bit about inflation. We have seen prices increase pretty steadily over the last 6 to 12 months. So I think that's something else that's on the outlook. We'd like to see some of these supply chain issues resolved and the economy get back to some normal level to where we get some more price stability. I think it's on the outlook right now, but that definitely presents a risk going forward into next year.
Right. Chuck Giscon, thank you for taking time to join us on Newsmakers.
Absolutely. It's nice talking to you.
Finally, we have Doria Sebastianova, an associate professor of economics and Center for Economic Education director at the University of Southern Indiana. Thanks for joining us.
Thank you for having me.
Doria, I got to ask you, first of all, how often do people mispronounce your name?
All the time. I'm quite used to it.
Every day, yeah. At the paper, I would only need to know how to spell it. But hopefully I got it right today.
Yes, you did.
So this is a really big question. I don't know if you can contain it in one answer, but how did the pandemic disrupt our economy?
That is the important question, and the answer is quite long. I will try to condense it. Disruption really would be the key word. The pandemic has caused the deepest recession since the Great Depression, but it's also been the shortest on record, having lasted only March and April 2022. The disruption has primarily occurred in the high contact sectors of the economy. So this is where we mention leisure, hospitality, travel, and personal services. Given that those are typically the lower paid occupations, women have borne the brunt of the pandemic. So the disruption has been unequal, not just by the sector of the economy, but also by the demographic. There's been some unusual features. Unlike the prior recessions since the 1970s, our manufacturing didn't decline this time. Services have suffered. Also, household debt hasn't increased. Spending on goods did. These are very unusual features of this recession. But I think the main takeaway probably is that it's been the shortest and deepest since the Great Depression.
Really?
Yeah.
So how is the path of the virus shaping the recovery?
It is absolutely key, absolutely instrumental to the recovery, given that the recession was caused by a public health crisis, the pandemic. So that's a very unusual cause. We had to shut down a perfectly healthy thriving economy. That was the case before the start of the pandemic. So now, similarly, the recovery can only proceed when the virus subsides. So with the invention of the vaccine and the reopening of schools and rehiring, recovery is proceeding, the economy is coming back, roaring back. At the same time, much uncertainty remains, depending on whether there's going to be new variants of the virus. And so that is going to shape the recovery for the foreseeable future. Hopefully, based on the current projections, it will subside. So hopefully the recovery will complete.
Well, it sounds like it would be an understatement to say that last year's recession was different from others.
Yes, it's been completely different. It's been unusual in lots of ways. So it, in a way, is unproductive to look at history of recessions to predict what our recovery will look like.
Has that changed as the pandemic has changed, and it looks now like we're at a low point in cases, but I don't know whether that's sort of gone with that ebb and flow?
Yeah, sure. The declining caseload has been good news. School reopenings, businesses hiring again. The jobs report that the Bureau of Labor Statistics just released last Friday showed an unemployment rate that's declined to 4.6%. Job growth has been strong. We've added over 500,000 jobs to the economy. Even more encouraging is the fact that half of them have been gained by women, who also were affected the most when the pandemic started. So there are certainly reasons for optimism. Consumers feel good about their personal finances. Holiday shopping will be strong. So these are all reasons to be happy. Schools are reopening. That too is helping women to get back out in the workforce. So there's lots of good news. At the same time, GDP growth underwhelmed at only 2% in the third quarter. So similarly, there's quite a bit of uncertainty still.
Right. Well, regarding caseload, in fact, here in Vandenberg County and surrounding counties, we actually had a big increase last week.
Yes, we have.
We'd had 2 weeks of cases going down, and now they're up again, and it's kind of a guessing game among the experts as to what will happen.
It very much is, and looking at vaccination rates is also productive currently. We have a low vaccination rate in the state of Indiana at just over 50%. So that too is shaping recovery.
Well, I wonder, as we move forward, are there any unknowns that are particularly concerning to you?
Yes, so there are lots of unknowns besides the virus itself. Something to look at very carefully right now are the labor markets in the US, because while the unemployment rate is declining, it is also disguising some of the issues in the labor markets. Specifically, our labor force is still a few million down from where we were before the pandemic. What we're seeing is while people are looking for jobs, they're not taking jobs. People are picky these days. They don't want to come back to low-paying jobs with poor benefits and inflexible work hours. So in a way, with all of the generous government stimulus, now workers have a stronger bargaining hand, so to speak. During the pandemic, we've all had the time to reevaluate our priorities, reevaluate our work-life balance. People want better jobs, better pay, more meaning, more time with families. So they're waiting. Companies are hiring, but workers are picky about the jobs that they take. This has been dubbed the life is too short unemployment.
Why?
Life is too short to work for low wages in unfulfilling jobs or careers.
Right. I was in the mall the other day, and it seemed like everybody was advertising for jobs, and I said that to my wife, who said, it's everywhere you go.
Yeah.
So, well, this situation here is unique with COVID, obviously, but in general, what factors do you look at to figure out our outlook?
So an economic outlook is always complicated. I would start with that, because there's many parts to the economy, and they can send very different, very mixed signals in different directions. So to piece together the overall picture is challenging. And so economic fundamentals is one piece of an economic outlook. And I'm just using the official Federal Reserve guidelines here, like the best way that I can explain it in plain English, perhaps, would be to look at some aggregate statistics like unemployment, like inflation, like GDP growth, what wages are doing, what consumption and investment patterns are doing, and then also certain markets, like the housing market, the stock market. Of course, lots of the detail is in the labor market, financial data. So all of this is important to include in a forecast. So it takes sort of a lot of brain power to truly piece together the overall outlook picture.
So if somebody said, you've got to have a forecast, gun to your head, what's our forecast for the immediate future? If you care to take a stab at that.
Sure. I would say that much of the local forecast is shaped by the trends that affect the national economy, but also there are some unique features that for the most part will play to our advantage given the composition of jobs in this economy. So overall, the big trends, as we know, have been the dominance of the service sector in the economy and the decline of manufacturing. Since the service jobs are the ones that have suffered most, they're the ones coming back, recovering fastest currently. So that is something that we're seeing locally and something that we're seeing nationally. This is where wages are rising. This is where companies are offering bonuses and hiring. Manufacturing, unlike on a national scale, here is quite prevalent. About 20% of our employment in the Evansville and Henderson metropolitan square area is about 20%. So it's a major employer. And since manufacturing didn't decline with this pandemic recession, it actually has been very supportive of our recovery. We've had some new projects closed that are investments into the manufacturing sector locally. 8 new projects. It includes a Toyota expansion, a Berry expansion, metals manufacturing, and so on. So that will bring in $800 million worth of capital investment into the area and over 1,500 jobs. So that's encouraging, the fact that we have a well-diversified economy. Mm-hmm. Of course, the big service here, so the second employer is healthcare, and that's where a lot of job growth is predicted as well. And so that's good news for our area. At the same time, the national trend with the decline of the energy sector, like in mining and oil and gas extraction, as well as farming, that's reflected in the composition of the local economy. Those are the negative forecasts in terms of what the jobs in those sectors will be doing. So kind of a mixed bag, I guess, is what I'm saying.
Right. Well, as we conclude, are there any thoughts that you haven't talked about? Some aspect of this that doesn't get asked about enough?
Yeah, doesn't get asked about enough and probably doesn't get communicated enough to the public is that the pandemic recession has really been a she-cession.
Because of the
with
female...
the women losing those jobs, the women now getting rehired for those jobs. Women are the ones who had to pick up caregiver duties and homeschool their children. They had to juggle it all. They provided all of these valuable services. And we cannot mobilize these women back into the workforce until we have all schools reopened and affordable, accessible childcare. This ought to be the focus of policy going forward. Not just as a matter of social justice, but women, after all, are half of this society, so it's for economic benefit just as well.
How would you achieve those objectives? What would you like to see done to make that happen?
I would like employers to be more flexible in terms of how work can be done on-site and remotely. I would be very much in favor of subsidized childcare so that our children can be well looked after. Quality of education, of course, matters. It's an investment in the future generation. Just in general, getting women educated, getting them into the good careers where the wage gap can decrease over time too, if women can go into better paying careers. All of this matters in terms of the status of women and the economic future of our society.
Doria Sebastianova, thank you for joining us on Newsmakers on WNIA.
My pleasure. Thank you.
Thanks to all of our guests for joining us today. Next week, we'll talk to local tax experts about some of the tax code changes for this year. What moves do you need to make before the end of the year? How will those stimulus dollars affect our taxes? We'll hopefully answer all your questions. Thank you for watching Newsmakers, presented by WNIN and the Evansville Courier and Press.